Knowing when to get back into a downtrending market reversal is much more easily identified when you can see the strongest candlestick reversal signals. The Dow, after doing a few dojis, kind of giving a warning that we're getting near the bottom, that there was now indecision between the bulls and the bears. Then we were followed a few days later by the MorningStar signal. Remember, the MorningStar signal, being one of the 12 major signals, produces an extremely high probability that if it's confirmed, in this case closing the next day above the T-line, that we were in a high probability situation of being in an uptrend. Now you add another factor, the Doji sandwich. A big up day followed by a doji. The simple doji rule told us if they opened positive today, it was going to trade positive, with this day probably being the same magnitude as this day right here. So when you've got a Morningstar signal followed by a doji sandwich, or essentially your morning sandwich, this becomes, even though it's not a very sophisticated sounding signal, it is an extremely high probability trade reversal setup. This implies that as long as we're above the T-line, we're probably going to now be in an uptrend. That same scenario is revealed over here in the NASDAQ. Now, as seen in all the indexes, look at the Doji best friend. Even though this is kind of a Morningstar signal, remember, our best friend signal is a doji followed by a gap up. You start adding the other confirmations of a doji followed by a gap up and a close above the T-line, now also being followed by a doji sandwich, just is a clear indication there's been a strong change of investor sentiment. So the rhetorical question is, how can they be trading the markets with all the bad news out there? We don't have to understand that. All we know is there's buyers coming back into this market for whatever reasons. This allows the candlestick investor to start identifying where there might be a reversal. Boeing just getting beaten up, started doing dojis. Remember our definition of a doji. That means there's indecision between the bulls and the bears, especially if they gap down in the oversold area. Doji, doji, little spinning top. What's this all illustrating? That there's a change of investor sentiment coming. The fact that they gapped it up on this day told us we could be buying, or on this day, if you wanted to be aggressive with the expectation of a reversal, you could be buying calls on any of these days and now expecting the results to be they're probably going to bring it all the way back up to the 50-day moving average. This is not rocket science. This is just the identification of what happens with investor sentiment. Add additional evidence, such as in the chart of Amazon, that when it came up, failed at the 50, notice how we use the T-line to effectively set up the visualization of the next pattern. They couldn't close it below the T-line. So not only do you have a T-line crunch in progress, meaning it's still crunching the price back up through the resistance level, we also know we've got the prospects of a bobble breakout, which is the failure at a major moving average, pulling back to the T-line, not going through, and now coming back up through this moving average a second time. If it opens positive, what do we essentially have? A J-hook pattern with a more defined resistance level here at the 50. You could take out the 50 and you'd still have a J-hook pattern. But with it right here, if it opens positive, meaning if the resistance level is right here, if it opens positive, this is an extremely high probability telling us we're going higher. With that information, when you start seeing the big stocks, Amazon, Apple, Tesla, all the big traders trading positive, that's a clear indication that investor sentiment is now turning positive again. Today's recommendation on ATI was based upon the Doji Harami in the oversold area, followed by bullish confirmation, closing right at the T-line yesterday. Made it very simple. Our recommendation was if it opens positive, telling us it's confirming this signal. It's telling us it's also not using the T-line as resistance anymore. More than likely, we have an uptrend. This is where you can start identifying what your upside potential is based upon filling the gaps here or the 34 or filling the gap up here at the 50. Remember, a lot of these stocks were panic sold. So now the buy signals are giving us opportunities to make some huge profits, like 100% or greater on the moves back up. Utilizing the information in the strong top-ranked signals and patterns of candlestick analysis allows you to put yourself in positions that have the highest degree of probability of producing profits. Our recommendation on Hasbro was based upon a down day, a doji gap up, the pre-formation of a bullish flutter kicker signal. We know the simple rule of a doji. It's going to move in the direction of how they open after a doji. It opens positive. We know it's going to trade positive. And we know what type of signal this is forming. A bullish flutter kicker signal, which basically consists of this little flutter in here. If you took this out, you essentially have a kicker signal, which implies there's going to be more upside. Just learning the simple results of what human nature does is clearly visible in candlestick signals and patterns, excuse me, which puts you in a constant position of always being in the right trade at the right time and being able to take advantage of a market trend with the most powerful moves that will occur in that trend. That'll be it. We'll see you in the chat rooms.